Well, hi guys, welcome to this Moneycontrol live stream. It's a Tuesday morning. The global cues are fairly muted, but can Nifty really defy the global trend and keep its date with that 25,000 mark? Because yesterday it was a touch and go. We were almost there. We were actually so close and yet so far when it comes to that 25,000 mark. Will today be a terrific Tuesday, and can we really clock that or conquer that 25,000 mark today or not? That's the key question as we head into the opening bell. But of course, lots of stocks, will be in focus as usual. We'll have PNB Housing that could see a block deal. We will have result reactions from the likes of Colgate, HPCL and Tata Consumer. A Nifty name will be reporting numbers today. Of course, yesterday we couldn't really take up your stock related queries, but today we will take up your queries. So please keep them coming in on a live feed on YouTube. We will try and get all of your queries addressed as well. But before we move any further, let's take a look at the top headlines at this hour. It was a mixed close on Wall Street, with Dow losing nearly 50 points while the S&P 500 and Nasdaq eking out small gains. The two-day FOMC meet kicks off tonight, with the Fed expected to provide some clues on the rate cut timeline. Meanwhile, Asian markets are edging lower, with the GIFT Nifty hinting at a muted start for the Indian market. Crude prices slipped, with the Brent trading below $80 a barrel mark. Demand concerns offset the risk of lower supply due to tensions in West Asia. Meanwhile, an uptick in dollar weighs on gold prices. ACC reports inline set of numbers in the first quarter. However, volumes come in a little better than expected. HPCL, on the other hand, misses expectations, while Colgate-Palmolive sees a beat on all parameters. And in key earnings today, Tata Consumer is slated to report quarterly results. Well, those were the top stories at this hour, but just taking you through what happened yesterday, recapping yesterday's action. We came very close to 25,000. In fact, we were just about, at 24,000, 999.75. That was the, that was the high that we clocked yesterday. But we missed out on that 25,000 by a whisker. But broader end of the markets was staging a very good rally, with the mid and small cap indices gaining somewhere around 1% or thereabouts. PSU Bank, that sector was the outperformer, 2% gains coming in there. The Nifty Bank as well was fired up almost throughout the session, but in the second half, we saw the Nifty Bank cool off, and we came off 900 points from the day's high. Today at pre-open, we are looking at flat moves. Let's see whether or not we open with a positive bias, and if we can pick up momentum as we progress through the day or not. But in terms of FNOQs, the put call ratio fell to 1.14 vis-a-vis 1.36 in the previous session. Yesterday there were no stocks in the FNO band. Today we have one new entrant, India Cements. That stock will be in the FNO band. In terms of fund flows, FIIs were net sellers yesterday to the tune of 2,500 crore rupees or thereabouts in the cash markets. But domestic institutional investors saw a very big buy figure, 5,600 crore worth of buying in the cash markets. Mutual funds have started deploying cash after budget, and that's evident with the kind of figures that we are seeing, on the buy side when it comes to DIIs. But on that note, let me bring on board my guests for today and understand, what the texture is looking like now that we are so close to that 25,000 mark. Aamar Deo Singh, who's the Senior Vice President at Angel One, is joining in this morning. Aamar, great to have you on the show. So close yet so far. We just missed out on that 25,000 mark yesterday. Today, what are the chances that we can conquer that figure? And in terms of Nifty Bank, we saw a good comeback yesterday, although we fizzled out. What are the levels, you'll be watching out for on the Nifty Bank index on the upside?
Good morning, and thank you for having me on the show. So, as you rightly said, Nifty touched almost the 25,000 mark, and in 0.25, it just missed by that. But then towards the later half, we saw that there was selling pressure coming into, and profit booking was also stepping in. And having said that, we saw some of the heavyweights also witnessing some selling pressure, though across the board we did see the mid cap and other category of stocks, some of them holding very firm. Bank Nifty, I would say, is the one where we are seeing some sort of correction, because if you compare Nifty with Bank Nifty is comparatively weaker placed as compared to Nifty, and that's primarily because of the banks that we've seen. And if we look at the major heavyweight banks, there also we are seeing some sort of correction, be it Axis Bank post the results, and then some of the other large cap banks where we witnessed selling pressure. Except some of the smaller banks, we've seen selling pressure there in most of these, some pressure there in the banking space. As far as Nifty is concerned, I would say 24,500, 600, that's a very strong support zone. On the upside, resistance is 24,900, 25,000, that's a zone of resistance. Technically, if you ask me, there's some, I would say, choppiness, which is clearly evident on the charts from a short-term perspective. Both on Nifty more, Bank Nifty, so clearly the trend is down from a short-term perspective. Bank Nifty is more or less choppy trading sessions, primarily because if you look at the intermediate-term trend, long-term trend, they are still quite strong, and there's not much signal of a trend change there. That's the reason we are seeing this sort of choppiness. Looking at the derivatives data, what we see here is that to a certain extent, we are seeing some sort of, I would say, put call writing, which is happening. Which is there to be evident in Nifty, and also we see that the maximum pain is at 24,800 level. So clearly shows that lower levels will be finding some support, but it could be consolidation for Nifty. Levels to watch out for Bank Nifty, if you ask me, Bank Nifty has got good support coming around. Initially, it will be the 50,000, 51,000 and 51,100. That's going to act as a zone of support. If that is taken out, then we could witness some sharp correction in Nifty, Bank Nifty towards 50,600, 700 levels. On the upside, Bank Nifty seems to be currently capped around the 51,700 to 51,800.
All right, those are the levels to watch out for on the Nifty and the Nifty Bank Index as well. Yesterday, PSU banks were all fired up. We saw PNB rallying somewhere around 6% on the back of great set of numbers. Of course, management has, moderated the NPA as well as credit cost guidance as well, and the stock clearly reacting to that. What would your strategy be on a PNB right now? And also PNB Housing, there are reports that it could see a almost 6.5% kind of a block deal today, wherein Carlyle is likely to, offload some stake. Offer size seen at 1,255 crores, floor price at 755 rupees per share. So PNB and PNB Housing, how would you be approaching them in today's session in particular?
See, first talking about PNB Housing Finance, it's clearly, if you look at the charts, clearly tells there's actually nothing happening. The stock did rally. If you look at the third week of June, the stock had rallied to almost 900 levels. And earlier also, the stock had made a high of 913 in January. So somewhere or the other, upside is very strongly at the top has been formed. As far as lower levels are concerned, 840, 850, that's a zone of resistance, immediate resistance. Whereas on the downside, the bank does have PNB Housing Finance does have good support coming on the 750 odd levels, 740, 750. But it's purely a range play. There's not much happening there. There's no trend evident. Looking at the other stock which you talked about, PNB, Punjab National Bank, here we are seeing some positive momentum building up, and the stock is displaying some sort of positive indications on the daily charts. If I look at the weekly charts, there also we've seen the stock breaking out of a few weeks high. So the stock now needs to sustain currently 127, needs to sustain above the 130, 132 levels, then we could witness the stock rally towards 140, 145 levels. But it seems that the stock is finding a base here.
All right, that's about PNB. You just want to point out that, Carlyle Group has actually increased the PNB housing block deal size to almost 13%. That's news just coming in for you. But the other stock, as we step into opening bell, the other stock that will be in focus would be HPCL. The profit and margins have seen a big miss. Profit down 87.5%, revenues unchanged. Margins have come in under 2% vis-a-vis 4.2% on a quarter-on-quarter basis. OMCs have seen a good run. Yesterday also they were fairly upbeat. Time to book profits here? Are the risk or is the risk reward looking unfavorable when it comes to the names like HPCL, BPCL now?
See, as far as HPCL is concerned, first I'll talk about that. So clearly, this seems to be the stock is running into a wall of resistance. So somewhere around, if we go back in time, so on 16 February, it had made a high of 396, and then as recent as 3rd June, it had made a high of 396, and recently also the stock had made a high of almost 390. Right. So anywhere between 390, 400, that's a very strong zone of resistance for HPCL. Till the time it doesn't breach those levels, I would say it's better to look at booking profits. Sustaining of those levels on significant volumes, then we could witness the stock rally sharply. Because if you look at the long-term trend, it's quite strong and positive. Intermediate-term trend, we are seeing some sort of consolidation.
All right, so we are, looking at the market open on your screens. Very, very muted start with a negative bias, but no trend really. You can see some bit of reversal coming in, as has been the case over the last few days. The Nifty down just about 11 points. Sensex has opened with a negative bias of 82 points or thereabouts. The Nifty Bank Index as well. Seeing some bit of weakness, but the broader end of the markets continues to hold out. The mid-cap index is in the green. It's picking up pace. No big gains coming in there, but 0.3% higher for the Nifty mid-cap index. In terms of the other sectoral movers, I want to see what the Nifty PSU banking pack is doing at the current juncture. The Nifty Bank, as I mentioned, is in the red. The auto pack is in the red. The PSU bank index, is in the positive. No big moves, but still trading with a positive bias, 0.2% higher for the Nifty PSU Bank Index. Pharma, Pharma is doing well, Realty extending gains. FMCG should come up on your screens. Today it's showing a fair bit of strength, 0.5% higher for the Nifty FMCG pack. Remember, yesterday most of the FMCG names were under pressure. So looks like we are seeing buying on dips rather. Tata Consumer is something that will be watched out for because the numbers will be coming out today. Aside of that, I think aside of banks, metals, IT and private banks, most of the sectors are trading in the green. So defensives like IT and pharma, were under pressure yesterday. Today as well, IT is extending those losses. Pharma is back in the green, and FMCG from the defensive basket is also among the top sectoral movers as we speak. Metals, yesterday they were shining, but today they have lost somewhere around 0.6% or thereabouts. That's the biggest sectoral laggard today. India VIX has cooled off a bit. Yesterday we saw, a fair bit of volatility. So today some bit of cool off happening on the India VIX index. In terms of individual movers, let's see which are the movers and shakers in trade. NTPC reported a good set of numbers over the weekend. We have a Jefferies report coming in on this particular stock. An upbeat report, and the stock is reacting to it, 2% higher for that. Power Grid is up almost 2%. Britannia, Hindustan Unilever, Asian Paints. So the losers of yesterday are witnessing buying interest. Dr. Reddy's, Tata Consumer is ahead of numbers. BPCL extending gains from yesterday because crude, mind you, is Brent crude rather, is below that $80 per barrel mark. Good news for OMCs. So reacting to that, BPCL is up. Tech Mahindra, Hero Moto, SBI, that was among the top Nifty gainers yesterday. SBI is extending gains, and so is Infosys. On the flip side, metal names not doing that well. Hindalco down almost 2%. Ultratech Cement yesterday, of course, it was upbeat on the back of the acquisition of India Cements. Today, witnessing some bit of profit taking. L&T, Tata Steel, SBI Life, LTI Mindtree, JSW Steel, Eicher Motors and Adani Enterprises are some of the laggards. Looking at the open, Amar, what would you be recommending for viewers in terms of stock picks?
So if we look at the opening, we are seeing some sort of muted opening. So I wouldn't say that there's much selling that's likely to happen. There could be some bounce back from the current levels because what we see is that 24,780 or 750, 800, that's an immediate zone of support for Nifty. So we could witness some bounce back. But for any significant rally, Nifty, it needs to sustain over the 24,880, 24,900.
All right. But what about your recommendations?
Yeah, so if we look at some of the stocks which can be looked at from a trading perspective. One is power grid. Power grid is one stock one can definitely look at. The stock is been consolidating again. Today it's witnessing some sort of up move. So the stock needs to sustain above the 350 odd level. That's a level to watch out for. Currently it's around 348. Sustaining above 350 levels, the stock could rally towards 375, 380 levels. So this is one stock one can keep a close watch on. The stop loss for this needs to be below the 335 mark, and entries to be initiated once it sustains over the 350 levels. That's the first one. And the second stock to look at is ITC. ITC, we've seen the stock witness a sharp rally from almost 450 levels to 500 levels. Currently, it's around 495. So any pullback in the stock towards the 480, 484 zone, that can be a good buying opportunity. And upside target would be around 510, and the stop loss in that case would be below the 470 levels.
Okay, those are the recommendations from Aamar. Aamar, on that note, let's quickly get down to some viewer queries. Just want to take up some of them. The latest one that's come in is on the defense and railway pack. Abhishek wants to know your thoughts on Bharat Electronics and Ircon. Yesterday again we saw railway stocks were picking up pace. Today, BEL, I think the charts were indicating flat moves on the positive side. So how would you really trade into this renewed up move in the railway stocks, especially BEL, which reported numbers yesterday, and Ircon? With that, I would also like to ask you about data patterns, because the numbers came out yesterday and it was a good set. So these three counters, Ircon, BEL, as well as data patterns, levels, and how would you trade into them?
So looking at BEL, if you look at BEL has been witnessing some sort of, I would say, some level of consolidation in this particular stock. So overall, the long-term trend remains very strong for it. Intermediate-term trend, we are seeing some sort of consolidation. So this is one stock on any pullback towards 300 to 310 levels. 305, 300 level could be a good level for entry, because the upside seems to be slightly capped towards the 330 odd level. So that's the level to watch out for, I would say, Bharat Electronics Limited. Talking about the other stock which you mentioned, data patterns. Here we are seeing some sort of weakening of trend, because the stock did rally. The stock rallied towards 3600 levels, and then currently it's around 3300 levels. So we are seeing some sort of consolidation, and the upside seems to be capped right now. So I wouldn't recommend fresh entry, because the risk-reward ratio wouldn't really work in one's favor. So this is one stock one can ideally wait for some time for any correction. On the long term, it's positive, but intermediate term also we are seeing some sort of consolidation and a top being formed.
Okay, that's the view on data patterns and BEL. Another stock from the power pack that I would like to draw your attention to is NTPC. Numbers came out of the weekend and they were a good set of numbers. This morning we have a Jefferies note on NTPC. They have a buy rating on the stock, and in fact, the target has been raised to 485 rupees per share. Renewable energy capacity ramp up, as well as pilot initiatives on green hydrogen. These are some of the factors that could drive a re-rating on the stock, according to Jefferies. Now, we have a query coming in on this particular stock from Isaac Adala, and he wants to know whether one should hold or sell NTPC. What would you advise?
I would say if you are long and you're having positions in NTPC, so ideally you should hold, because the stock after a long period of time has breached because earlier it was having resistance around the 395, 400 level. So that has been taken out, and the stock is trading almost at record highs. So I would say that you should definitely hold on to your position. Don't get out of this position, because it seems to be quite strong and firm. Even from a charts perspective, long term is quite positive. Intermediate term trend was displaying consolidation, but now there has been a breakout today. So today is going to be a very important day for NTPC. If it sustains and closes above the 408 to 410 levels and sustains over that, then you could witness a real sharp rally in NTPC. So hold on to your position. If you ask what are the levels of strong support for the stock, that's around 370, 360. That's a very strong support zone for NTPC.
All right, Isaac, take note of the levels that Aamar just mentioned. A close above 408 will be crucial for NTPC. Aside of that, want to bring in your view or bring in a query on Colgate, so to say. Debu K has written in and wants to know your thoughts on this particular stock. Colgate, of course, doing well, 5% up. The first quarter numbers were a beat on all parameters. We've got some mixed views coming in from brokerages even then. Nomura has a sell call. The target price is at 2,800 rupees per share. It says that the risk reward is unfavorable at the current juncture and it is entering a moderate EPS growth phase. On the flip side, you have Jefferies that has a buy call. Target price has been raised to 3,570 rupees per share. It has noted that the company has delivered impressive growth in revenues in the first quarter and there has been a pickup in rural along with strong execution, and they have upgraded the earnings estimate for a third quarter in a row. So mixed views coming in from brokerages, but what would your thoughts be on this stock? Is the risk reward unfavorable here, or do you think charts are suggesting that there could be more upside here, because the stock has done fairly well if you look at the 3-month chart and the 1-month chart as well?
So overall, I would say that the stock remains strong and positive. So those who are long, they can definitely hold on to their positions. Fresh entry at the current levels, I wouldn't recommend.
Okay, that's the view. Hope that answers your query. The next query I spotted was on a Shriram Finance. Pankaj Kajalia wants to know your thoughts on this stock. The stock saw a fairly good bump up on Friday, right? 9 to 10% kind of an up move. Today it is a little bit, in the negative. It is 1% down or so. But would you advise a buy on dips here?
As far as Shriram Finance is concerned, again, I would say that the stock, though, remains strong on the long term and the intermediate term trend. We are seeing some sort of consolidation happening on the daily charts, and the levels to watch out for is earlier the stock had made high of almost 3,050, 3,060 levels. So that's going to act as a zone of resistance for the stock till the time it doesn't reach over the 3,050, 3,060 level. I would say it could be in for consolidation. And on the downside, the stock is very strongly supported around the 2,600, 2,650 zone. So that's a zone of trading range for Shriram Finance, and the daily chart clearly shows that it could be in for some trading range.
Okay, that's the view then. Shriram Finance, that was, SRF chart. You're talking about Shriram Finance really. But let's talk about Premier Explosives, I beg your pardon. Abhijit wants to know your thoughts on this stock. This stock has seen a very good up move in the last 5 sessions, 14% or 15% up move in the last 5 sessions itself. And Abhijit wants to know whether it's a hold or sell. Is it time to book some profit, or would you say it's a breakout stock and could see more up move?
So I would say that you're talking about Tata Consumer, correct?
No, I'm talking about Premier Explosives.
Acha. So from that perspective, one can, I wouldn't recommend fresh buying in the stock because the stock has witnessed some upside move. So I would say that rather only on correction, one can look at a buying opportunity. Otherwise, one should wait out.
Okay, that's the view. Hope that answers your query. The next query that I spotted is on a Route Mobile coming in from Maheshwar Bhanu. Is it add hold for medium to long term? Can it give returns of 20 to 30% from current levels? That's the question. In the last 5 sessions, it has shed somewhere around 7% or thereabouts. Do you see some bit of reversal on charts, or do you think the weakness that it has seen of late is likely to continue?
So this is which stock you're talking about?
Route Mobile.
I couldn't get you.
The stock has shed some. Route Mobile, Aamar Route Mobile.
Not
right,
able
I think
to
we'll
actually
circle back and all right,
Yeah,
no worries. Why don't you share your thoughts on Tata Consumer then? In that case, the stock has been witnessing bouts of profit taking. The numbers are coming out today. Ahead of numbers, how would you really trade into a Tata Consumer?
So if you look at Tata Consumers per se, so this stock is definitely very strong on the charts. we are seeing some sort of consolidation here, and a double top has definitely formed on the chart. So 1250 is a zone of resistance for the stock. Only above that we could witness some significant rally. Otherwise, we could see the stock trading sideways. Downside support is somewhere around the 1150 level. So 1150, 1250 is the zone for Tata Consumers in the short term.
Okay, that's the view on Tata Consumer. But a query on Hindalco. Mukesh Karthikeyan wants to know your thoughts on whether one should add Hindalco, because the stock has been consistently seeing selling pressure. Is this dip a buying opportunity?
Overall, if you look at the metal space, we are seeing some sort of topping out pattern forming and also some sort of consolidation. So I wouldn't really recommend buying at the current levels. If one really wishes to look at some entry point, then ideally that is somewhere around the 620, 625 zone, not at the current levels, because here the risk reward issue isn't in one's favor, and also the short term trend remains down with a negative bias. So I wouldn't recommend buying. In the stock, upside seems to be capped for Hindalco somewhere around the 687 levels.
Okay, that's the view. Upside is capped at 687 levels for a Hindalco. Couple of banking queries are trickling in. I want to bunch them up and get you to address them. Aamar, Alex wants to know your thoughts on a Bank of Baroda, and Tanisha Jain has written in and she wants to know your thoughts on an Indian overseas bank. How are these two stocks poised on the charts now?
So looking at first Bank of Baroda, we are seeing some sort of consolidation happening, because the stock has corrected from almost 300 levels, currently around 255. And but post the sharp correction, the stock is forming a base. So the recent lows of the stock is finding some very strong support. But for any significant rally, the stock needs to sustain above the 260, 265 zone. If the stock sustains above that level, then you could witness an upside move in the stock. Otherwise, the stock would be in for consolidation. Downside, the stock has got good support coming around 240. Upside, as I said, 265, 270. That's going to be immediate zone of resistance for the stock. And the other was Indian Overseas Bank, correct?
That's correct.
Yeah. So looking at Indian Overseas Bank, again, I wouldn't really touch the stock, because the stock is clearly in a trading range. There's no trend per se. So on the upside, 72, 75. That's a zone of resistance. Long-term charts are positive, but intermediate term trend, we are seeing some weakness. So the top seems to have formed for the stock. So the stock is very good from a trading perspective, a range perspective. So 60, 62 on the downside, very strong support. Somewhere on the upside, 75. So it's between 60 and 75. That's the range. I don't see much happening in the stock, and the stock is in for consolidation.
Okay, those are the two queries that have been addressed. Hope that answers your query. But since we are on the topic of banks, AD wants to know your thoughts on how Bandhan Bank is poised now, whether one should hold or sell. Yesterday, we saw very good moves coming in on the back of impressive, you can say, the impressive numbers in the first quarter. So Bandhan Bank, at one point in time, it was among the weakest from the banking pack. But now, after earnings, how is it looking?
Bandhan Bank, if you look at there are many, I would say few companies which really have underperformed. They haven't delivered, and their investors have been, I would say, not rewarded at all, or on the other hand, they've been punished. So Bandhan Bank is one of that. And the stock, if we go back in time, the stock at a point of time in March of 2020, the stock was trading 520. Yes, March was a very bad month, and we witnessed sharp correction across the markets. And then the stock did rally towards 430 in December of 2020. And then again, all the way it corrected towards 169, 170. So currently it's around 220. Yes, the earnings have come out well for the company. So that has what has led to a spike in the upside move. So from almost 180, 85, the stock is currently trading around 220. It shows that the worst seems to be over for the stock. That definitely seems to be there on the charts for Bandhan Bank. But for any further rally, the stock has a potential now to rally towards the 230, 240 levels. That's a level where the stock could rally. And if it sustains above that level, then we could witness some further sharp rally. Otherwise, the stock is finding some resistance or will find some resistance around the 230 to 40 zone. Entry at the current levels, I wouldn't recommend.
Okay, that's the view on a Bandhan Bank. A couple of more queries that I can quickly squeeze in. There's one on Delta Corp that has come in from Sudhir Reddy. Delta Corp has made a good comeback in the last 3 months. I think we have seen returns of somewhere around 10 to 12%, if I'm not mistaken. It's been 11% kind of a return in the last 3 months on a Delta Corp. After all the weakness, news-related sell-off, do you think the worst is over in terms of where the stock is headed? On the charts, what are the signals you're getting?
Yeah, if you ask me about Delta Corp, we can say that the worst is over for the stock. At least the downside seems to be capped. So we have got good support coming for the stock around the 120, 125 zone. Currently, it's around 136 odd levels. But upside also, the stock is not very, I would say, very strongly placed. Means upside is going to meet with resistance somewhere around the 140 level, 140 is reached, then we could witness the stock rally towards the 150 odd level. So 140 should act as an immediate zone of resistance. Currently, it's around 136. Sustaining over 140, then you could witness some sharp move in the stock towards 150. Once it starts sustaining above 150, then only you can expect some significant rally, maybe a rally between 15%, 20% in the stock if it sustains over the 150. Otherwise, the stock is in a trading range. As I said, 120 is a good support for the stock.
Okay, 160 on the higher side, 120 on the lower side. That's those are the levels to watch out for on Delta Corp. Just want to quickly take up one more query. Then Vijay has written in. He has a query on Merck Electronics. He holds 20,000 shares at the rate of 26 rupees 69 paise. Merck Electronics, last 1 month we've seen a 17% up move at the current levels of 2381. He's making mild profits. What would you advise?
This is a Bharat Electronics, you said?
No, it's Merck, M-I-R-C, Merck Electronics.
Acha, okay. There's some... see, I really don't track this stock, but currently it's pulled back from a 20 to currently around 24 odd levels. See, the stock has the potential to rally. If you go back and see, the stock could rally towards 27, 28 because that's a zone of resistance, but one should be really careful while trading such stocks.
Okay, I want to circle back and ask you about Root Mobile once again because we have another query coming in on this particular stock. 1650 is where it's at, and our viewer Vinod had bought it at levels of 1600 rupees. He wants to know, is it good to average or exit? Any advice here?
This is for which stock? Because there's some disturbance in the voice. Yeah.
Okay, I'm talking about Root Mobile, R-O-U-T-E, Root Mobile.
I'm not able to pull up this stock, so I will not be able to comment on this.
No worries, no worries. I think, we'll just let it go on that note. But with that, I think we've come to the end of the query segment. I would like to thank you, Aamar, for taking out time and joining in this morning and sharing your thoughts with us. Look forward to interacting with you once again sometime soon.
Thank you.
Well, on that note, let's talk about some of the IPOs that would be opening up today. Akum Drugs is one IPO that will be opening. In fact, that has opened up for subscription today. It has mobilized somewhere around 829 crore rupees via its anchor book. Anchor investors include global names like BlackRock, Small Cap World Fund, Abu Dhabi Investment, as well as HSBC Global. And of course, the 1856 crore rupee IPO has opened up for subscription. It will close on the 1st of August. The price band is somewhere around 646 to 679 rupees per share. It is a fresh issuance of 680 crore rupees and OFS, or offer for sale, of 1.73 crore shares. In fact, when we are on the news of IPO, sources have told Moneycontrol that First Cry is likely to list on the exchanges on the 13th of August. It is likely to launch its anchor book for its IPO on the 5th of August, and the IPO may open for subscription between August 6 to August 8. Of course, these are source-based, Moneycontrol exclusive. The IPO will value the startup at a touch below 25,000 crore rupees. Of course, this will be the second big startup, whose IPO will be opening up, because remember, Ola Electric is the big one to watch out for that will be opening on Friday. Well, on that note, let's just see what the markets are doing at the current juncture. We are back into the green. No big moves yet, at least. So the Nifty is holding on to that 24,850 mark, 16 points higher. Mid-cap index is, of course, outperforming 0.3% higher on that index. The Nifty Bank index has also edged back into the green. So that's a positive. We'll see whether or not we can pick up some momentum in terms of individual movers. PSU names are doing very well among the top gainers: Power Grid, NTPC, BPCL. Although HPCL, is under pressure on the back of weak set of numbers. Tata Motors, Asian Paints and Coal India are some of the other movers. But what's not doing well is the life insurance pocket, SBI Life and HDFC Life. These two counters have seen very good moves over the last 1 month, but today some bit of profit taking happening there. And you have Hindalco also from the metal pack that's not doing all that well. But of course, we are leaving the market in the green. Let's see whether or not we manage to pick up some momentum and keep the date with that psychological 25,000 mark today itself or not. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. But stay tuned to Moneycontrol for all your other news and updates, and come back and join us at 3:30 p.m. on Closing Bell. Have a great trading day.